Hello, everybody. So let's talk a little bit about inflation. Let's talk a little bit about the market. Let's talk mostly about the economy. What exactly makes up inflation? 35% of the CPI is for energy. What exactly is the main indicator of energy? How do you actually feel energy? You feel energy in two ways: crude oil and actual gas prices. Crude oil is the price of a barrel of oil. Gas prices is crude oil after distribution, refinement, and production and delivery. All of a sudden, you have gas that you actually pump into your car. I started following the prices of gas and I started following the prices of crude approximately a month ago. And whenever you have the CPI report, whenever you have inflation, whenever you have pretty much anything to do with the economy, at a minimum, you are a 30-day behind lag system, which means when you get the information today, it's actually information that happened 30 days ago. So if you want to try to predict what's going to happen in 30 days or 60 days or 90 days or even in a year from now, try to do your best hypothesis. You start tracking certain things. In our case, we're going to track crude oil and we're also going to track gas prices. Now, this does not mean necessarily that inflation is going to go away. On the contrary, I don't think that inflation is going to go away, but I do think that inflation peaked. I do not think that we're going to get a 2% inflation or 2.5% inflation rate. I don't think that's going to happen. I also don't think that we're going to keep this crazy 9.1% inflation rate. I do think that we're going to go somewhere between the range of 5 to 6% inflation, and then we're going to see what's going to happen after that. I'm not saying it's going to happen in the next quarter. I'm not saying that it's going to happen in the next report. All I'm saying is that I personally believe that inflation has peaked. When you look at inflation, you're also looking at a 1-year period. So the inflation rate in June that we got in July, you have to compare against the inflation rate of June 2021, which means next month, the month after that, so on and so forth, our base case inflation is 9.1%, which is record highs for over 4 decades. It's going to be quite difficult to keep up this crazy inflation rate. For us to keep up this crazy inflation rate, we got to keep going higher, higher, higher in a significant multiple of where our current inflation is now. I just don't see that happening for various reasons. Number one, the bar is set too high, so to speak, and oil is going down and gas is going down. Please allow me to show you these few charts. This is directly from AAA. The current average gallon is $4.38. Yesterday it was $4.40. A week ago it was $4.54. And a month ago it was $4.90. Although we are definitely a lot higher than where we were a year ago at $3.15, $4.38 is a lot better than $5. Now, this monthly average keeps going down as well. When I first started giving you guys these updates, because I started noticing the prices are going down, the average price of gas was $5.01. Now it's $4.94. It doesn't seem a lot, but if you take the base case of $5 and now you look at the price of $4.38, we saved around 71 cents. That is approximately a 14% discount, 15% discount from where we were, approximately a little bit more than a month ago. If you put it in perspective and look at those numbers, you're like, oh wow, it is starting to go down. The thing is, like a stock, if a stock is down 50%, 60%, 70%, we just had a little bit of a recovery. Even though your stock just went up 10 or 20%, yeah, it's fantastic. But in the scheme of things, it doesn't seem as impactful because you're down so much. So although we are going down, you're not feeling it as much because we went up so high. But slow and steady, the prices of gas are coming down. And if this keeps happening, the prices of inflation, in my personal opinion, should also go down. I'm going to correlate it very soon to the Federal Open Market Committee and the Federal Reserve. Just give me a moment to show you one more chart. This is Yahoo Finance. I love Yahoo Finance. If you click on this thing that says crude oil, you see a number. The number is $95 a barrel. If you go for 5 days, you can see that we're down $7 because I hit 102. If you go for the month, we're currently down 10.4%. If you go for 6 months, we're only up 11.6%, which means for 6-month period, we're starting to stabilize from where we are. Now, if you go for 1 year, we're still up around 32%, but we're getting a lot closer to where we need to go. If you go to the 6-month chart, I want you to look at somewhere around here, June-ish. When you go on June 10th, June 9th, something like that, the price of crude oil was around $122 a barrel, while now it's $95 a barrel. And if you look at what happened the last week, the price of oil started going up and it started hitting that 104, 103 mark, and it came right back down to $95, even touched $94 a barrel. Now, this is quite simply supply and demand. People reached a boiling point where they're no longer willing to spend the price of gas. And if you're no longer willing to spend, the price of gas will go down. A lot of goods and services will start going down as well. Goods, for example, perfect supply chains or powerful supply chains and supply chain defensive movements from big box retailers like Walmart, like Target, and like other such big box retailers. They ended up ordering a lot of extra goods. Those goods was in preparations for terrible supply chains and bottlenecking. Those supply chains and bottlenecking is starting to get resolved. I'm not saying that it's as good as it was pre-pandemic. What I am trying to say is they are starting to get resolved. And now you have third-party liquidation companies that are buying these goods right from the pallets, like right from the ships, and sending them to their own warehouses. They're never even touching Target. They're never even touching Walmart, which means prices are going down. The Federal Reserve, they literally want people to go out of work. They want people to get fired. The fastest way to bring down inflation is to make sure people are not working. I know it sounds counterintuitive and it sounds crazy, but that's what they're trying to do. Eventually, in my personal opinion, inflation is going to go down. This will happen in the next 4 to 10 months. When this happens, the Federal Open Market Committee, that's going to be meeting next week. I'm going to be filming this live on all 3 of my channels. Please join me. They're going to stop raising the interest rates, the federal overnight funds rate. When that happens, this is going to be a bullish signal for the stock market. If they should be stopping to raise the rates, or if they will stop to raise the rates, this I cannot tell you. All I'm saying is that in my opinion, I do believe they will at one point within the next 4 to 10 months stop raising that federal funds rate. There was a lot of worry that they were going to be raising by 100 basis points as opposed to 75. But one of the federal governors, and I forgot his name off the top of my head, says, just because we raise it 75 basis points, don't think that we're not going to be serious. In other words, he was kind of hinting that it's going to be 75 basis points. That's going to bring us to around 3.25 interest rate. That 3.25 is probably going to keep going up to around 5%. I don't see the Federal Reserve raising more than 5%. And they themselves don't want to do it because it's absolutely destroying the economy. Once they see inflation stop peaking, and inflation is going to go down for a couple of CPI reports, which I believe is going to happen in July, which we're going to get in August, which we're going to get in September, and October, which we're going to get in November, I believe that's when the Federal Reserve is going to stop doing 75 basis points and start doing 50 or even 25 basis points. Eventually, this will stop, and I don't see them going past 5 basis points. When this happens, this is going to stabilize the economy in several ways, for better or for worse. And I'm not talking about long-term or short-term. I'm just saying that this is going to happen. Right now, real estate is going down because mortgage rates are going up. But for the last couple of weeks, the mortgage rates started going down. Once the Federal Open Market Committee stops raising interest rates, we're going to see a peak of mortgage rates. When that's going to happen, that is going to stabilize the housing market. The housing market is very strong right now, even though there's a huge economic downturn. This is going to be good for the general population. The stock market is going to have a rally, and the crypto market is going to have a rally. I believe that the stock market and the crypto market is going to have a rally sometime in the first half of 2023, in my personal opinion. Guys, everything I'm saying could be completely 100% wrong. I'm not a financial advisor. This is purely entertainment and educational purposes only. It takes a lot of balls and it takes a lot of courage to come out here and give you guys my opinion, because people could screenshot this at any point in time. You're either going to be right and you're a genius, or you're wrong and everyone's going to laugh at you. But that's okay. I put myself in the public eye because I have a YouTube channel, and I'm okay with that. If I can help somebody, including that somebody who's going to be me, I'll be very, very happy. Guys, in my personal opinion, investing is just this: making hypothetical theses based on the current data and knowledge that you possess, and try to see the outcome and the future of what's going to happen. I hope everybody trades very safely. And remember, if you're scared of growth stocks and you're scared of cryptocurrency that's very volatile, you could just invest in index funds like tracking the S&P 500 and tracking the NASDAQ. You can't really go wrong. And the returns that they give you is going to be approximately 7% a year. Every 7 years or so, you're going to double your money. You really cannot beat that, not in the long term. A lot of people think that they're the best traders, and sometimes you can win. In the long term, you're not going to do wrong if you're investing in the S&P 500 and NASDAQ. If you believe in America, then index funds are going to definitely do you right in the long term. So if you don't have a risk appetite and you don't want to trade anything risky or volatile, you can't go wrong with those. However, remember, those huge returns, they're not going to come, just like those huge losses are also not going to come. You're playing it safe. There's several ways to invest. One of them is a growth aggressive strategy, and the other one is asset preservation, which means you don't want to lose the money that you have. All of these people that hate growth stock investors, those are exactly those type of investors. They're scared. They clench their butt like this not to lose a quarter in the market. But they're also never going to make those crazy moonshots. The type of investor that you want to be, there's no good, bad, right, wrong. It's all about your personal style. For me, being 39 years old, I have a son at home and I want to provide for my family. I invest pretty aggressive in growth stock strategies because I know that I have a very long 5 to 10 year horizon for those stocks. Guys, thank you so much. I'm going out in my pretty hat. I'm going to put on my button down and I'm going to go eat some amazing seafood in St. Martin. Peace.